Good morning and welcome. We're on Friday again, weekend in front of us, but we also have a full day of trade in front of us with the SGX Nifty gaining 0.2% as we speak. But this is that show where we take you through all that's happening in global markets and then we follow it up with global news, domestic news, and then we go stock specific on what you need to keep your eyes out on today, through the day. So we'll start off with that first piece. Ankita, talk to us about how global markets are doing.
Good morning to you, Harsh, and good morning to everyone. Like you said, there are gains coming in on the SGX Nifty. Even the US markets rallied yesterday. Now, US indices gained after Atlanta's Fed President Raphael Bostic rate hike commentary that came in now. Fed's Bostic supported a rate hike of 25 basis points versus the expected half-point increase. Now, on the basis of that, the Dow Jones closed 341 points higher, best day since February the 13th. The S&P rose 0.7% in trade, and the Nasdaq Composite climbed 0.7% in trade. Now, all the major averages are on their way to posting a positive week that ends today. Now, on the economic data front, the non-manufacturing PMI report is expected to come out as of today, and we are also expecting commentary from the Fed Governor Bowman, and Richmond Fed President Barkin is awaited as of today. So that is something that we will be watching out for. I mean, given the kind of moves that are coming in from the US markets, clearly the commentaries have a major impact on the moves that come in the US markets. So now moving on to the European markets. European markets closed higher again on easing Eurozone inflation data that came in yesterday. Now, Eurozone inflation fell to 8.5% in February versus 8.6% in the previous month. DAX was up largely flat, but was up 0.1%, and Stock 600 was up more than 0.5% in trade. That was a roundup coming in from the US and the European markets. Harsh, where is the crude at?
Well, yes, crude, Ankita, is a very interesting spot. The cap on crude largely is driven by the fact that Europe's inflation, even though below expectations, has still come in quite elevated, and what the market is really projecting or building in, especially where crude is concerned, is they're building in some amount of or more rate hikes going forward for Europe, which will keep a lid on oil prices where that part of the world is concerned. But there is a good relief that's coming through from China. China has grown at the fastest pace in more than a decade last month, and I'm talking about manufacturing activity in China, and that's what data showed on Wednesday, and that obviously adds to the evidence of the rebound that's coming in the world's second largest economy. It's clear that there is going to be a rebound there, and the other piece also is that China's seaborne imports of Russian oil are set to hit a record high this month as well. So a couple of those factors will drive oil higher, and Europe currently keeping a lid on oil. Where is the dollar index? I'll quickly refresh my screen. The dollar index currently just below that 105 mark. So that too will be an important check to look out for where crude is concerned. So that's how I would sum it up.
All right, Harsh, and we'll quickly take you through the events that you need to keep a track of on. And we have the service PMI that is going to come out for India, US, Eurozone, and China. Important number that we need to keep an eye out for. Also in the corporate action, we have the NLCLAT order that will be coming out on the lender's plea for Jet Air. And we also have, of course, the EGM for Dish TV, where they will be meeting up for appointing of the new directors. And finally, we have Tech Mahindra's analyst meet that's due as of today. So these are the things that we will be keeping an eye out on.
Well, yes, absolutely, an eye out on all of those things. Let's quickly move on. Seems like the ECB's hawkish stance is likely to continue after headline inflation across the 20-member bloc came in at 8.5% in February, signaling that the rate hiking cycle might not be completely over yet. Remember, headline inflation stood as high as 10.6% in October but reached a revised 8.6% in January, while core, which is more looked at, rose to an estimated 5.6% in February from a 5.3% number in January. So keep an eye out on all those numbers because those will really drive rate hikes going forward.
Speaking of which, US Federal Reserve officials wrestled with whether the recent data showing inflation, jobs and spending all hotter than expected was a blip. Now, the separate comments from Fed Governor Christopher Waller and Atlanta Fed President Raphael Bostic posted a question central to the next phase of the Fed's battle. Bostic also said that he was ready to raise rates higher if upcoming data did not show inflation clearly heading back towards the central bank's 2% target. He called for continued interest rate hikes to above 5%.
Well, and sticking with US and Europe, European Commission President Ursula von der Leyen will discuss clean energy and supply chains with President Joe Biden in Washington on the 10th of March. European nations are worried that new US subsidies will hurt their economies. Biden's Inflation Reduction Act, a $430 billion bill that offers massive subsidies for US-made products, will go live.
And the United States said new military aid for Ukraine would be discussed at a meeting with Germany's leader today. Washington will announce a new $400 million military aid package for the Kyiv government. This is expected to be a major topic between US President Joe Biden and German Chancellor when they meet at the White House. The United States has provided nearly $32 billion in weaponry to Ukraine to defend itself against Russia.
Well, and China sent most warplanes near Taiwan in nearly 2 months. The move comes as the US approved the sale of $619 million worth of arms to the democratically run island. Some 17 J-10 and 4 J-16 fighter jets were detected in the southwestern parts of the island's air defense identification zone.
And third points, Dan Loeb has taken a passive stake in chipmaker AMD. The hedge fund manager took the bet when AMD shares struggled. The company's shares have underperformed the rest of the sector over the last 12 months. Now, AMD recently reported fourth quarter earnings that exceeded Wall Street expectations but guided for a 10% decline on a year-on-year sales in the current quarter.
Well, and moving to social media, TikTok has been banned by several countries due to the app security issues. So today, the Chinese-owned video app has announced that soon they are setting a new default screen time limit of 60 minutes for its users who are below the age of 18 years. As per reports, if the 60-minute time limit is reached, users will be prompted to enter a passcode requiring them to make an active decision to extend their time spent on the app.
And switching gears to top takeaways from the G20 foreign ministers meet in Delhi, there was no joint statement because the countries could not agree on some issues. Now, the US Foreign Secretary targeted Russia, saying that the meeting has been marred by war in Ukraine. And the Russian foreign minister apparently apologized for the alleged indecent behavior of the Western delegations. Listen to what the Prime Minister had to say about the meet.
The experience of the last few years, financial crisis, climate change, pandemic, terrorism, and wars, clearly shows that global governance has failed in both its mandates. No group can claim global leadership without listening to those most affected by its decisions.
For much of the global south, this is a make or break issue, that the costs of fuel, the cost of food, the cost of fertilizer, the availability of fertilizer, which means next year's food, these are all extremely pressing issues. And if you see some of the some of the countries who were already struggling with debt, who were already impacted by the pandemic. For them, this conflict, the knock-on effects of this conflict coming on top of that has been really, damaging is a very, very mild word. It's not realistic, it's not credible to talk about the future of the global economy and the multilateral order if we are not able to really address and focus on the issues of those who are most in need.
Now, to put some of those comments into perspective, we spoke to certain experts, and here's what they had to say about all of those comments. Listen in.
We must understand that our credibility in the eyes of the West, they're not saying so on our face because we provide them a big market and we're still a democracy and they love the idea of engaging only with democracies, that they're not saying so on our face, that our credibility is dented in their eyes because we've taken a nuanced and a well thought through stand that we are not on any one camp and we are taking measured steps towards the end solution. The second thing is that India has achieved something in this G20 engagement, where India's foreign minister has had the chance in the given scenario, in a time frame of 48 hours, to engage with all the important foreign ministers of the world. And this will give our foreign office a more holistic perspective. Ukraine is the battleground. Ukraine is the scapegoat, the fall guy. And Ukraine has made it very clear that its patrons are in Washington and NATO. And Ukraine apart, America has made a lot of money out of this conflict. Russia is making money selling oil at phenomenal prices.
Fact is that eventual agenda for the West is to get the last bastion of socialism from Europe out as far as possible. And that is not happening so easily. Finally, Putin has dug his heels. Now, what is in India's interest and what is India's capacity? Can India actually do anything between the USA? I'm not even counting Ukraine. Ukraine is actually acting as a proxy for the USA. Can India do anything between the USA and the Russian Federation because of its own linkages with the two countries economically and our own interest, friendship, etc., etc.? I think in this particular scenario, both Russian Federation and the USA, their ultimate objective has not changed. And in that process, whether India pleads, does whatever it wants, economic, ultimately, they are going to remain where they are.
And well, with that, it's time for a quick breather. Do not go anywhere. There's lots more news coming up on the domestic front on the other side.
You're watching Market Cafe on ET Now. Let's quickly take it to Honda. Honda Cars just launched 2 hybrid versions for its Honda City cars in a push for zero carbon neutrality by 2050. The car has 2 hybrid versions on the back of a good response for the Hybrid V in 2022. Speaking to ET Now, Sales and Marketing Vice President of Honda Cars, Kunal Bale, shares how the new introduction will help the company achieve its goal for increasing the sales revenue for hybrid cars. Listening.
City is one of the most aspirational brand in Indian automobile segment. It has a very strong place in the mid-size sedan, and Honda engines are engineered towards giving a fun-to-drive element as well as a very strong fuel efficiency. So Honda has chosen the hybrid is one of the great fuel options, engine options for the Indian customers. And with the hybrid we last year, we got a tremendous response. We could not sell good units because of supply constraints. Now we are introducing a new grade, which is 100,000 cheaper, about 1 lakh cheaper from the previous grade of hybrid. So we'll have 2 grades, one is the lower grade at V and we'll have a top grade at Z. So basically we want to offer the hybrid to more number of customers by coming up with the lower grade, and there is a huge fan following, coming on the high fuel efficiency and of course low on carbon footprints because of the electrified technology.
So with the lower grade version, what you are actually looking at, what is the estimate that you understand that this lower grade version can make a space for itself?
So basically, earlier we had about 8% of the sales of which was hybrid. Now we're targeting about 15% of sales from hybrid. So coming up with the lower grade expands the customer buyers, giving a better option for the hybrid cars.
Right, and in the latest that's coming in on Adani Group, the SB Adani Trust, which is the promoter group, has sold 21 crores worth of equity shares in a mega block deal. Now, they have sold shares worth 15,446 crores to US-based GQG partners. Now, shares were sold in a total of 4 group companies, including Adani Enterprises, Adani Ports, Adani Green, and Adani Transmission. Now, remember, GQG Partners is a global and emerging markets investor which manages more than $92 billion in client assets.
Right, and we, as always,
Market Cafe. Now let's quickly move on to news that's coming in on the domestic front. In an exclusive interview, Navika Kumar, the editor-in-chief of Times Group, Nav Bharat, caught up with Bill Gates, Foundation founder Microsoft, to discuss the state of Indian healthcare. Now, Bill Gates says India's performance was far better than any other country during the pandemic, and he also praises various government initiatives taken during the process. Listen into this slice of the conversation.
India now in health, the focus on foundational learning is a fairly new thing in the last few years. NIPN, which is a really great program that we want to help accelerate the progress on that. So yes, India's, it's more than a glass half full in terms of the great work.
In India, the political discourse is rather shrill. Many people compare the pace of growth in the last 9 years and before that. Do you see any change in approach of governance, especially in the areas that we're talking about in the last 9 years since the Modi government?
Well, the progress numbers I look at go all the way back to the year 2000, so there's been progress. I will say that the quality of the government staff involved in health work or education work or this digital work, including the financial services, that quality continues to go up. India has a number of great people. The fact that a lot of them are being picked to serve in key government roles, that's a big positive trend, really I'd say of the last 5 years in terms of my noticing that bodes well for the future.
Mr. Bill Gates, we've spoken about the pandemic experience. How do you think India handled the pandemic? Are there any lessons to be learned on what could be done better? And which were the areas where we did, as a country, perform well, better than expected?
Well, India did well compared to all countries in terms of making vaccines. We worked with partners like Serum to help them get going, but that resource was not only great for the country but also for the world. The digital approach with COWIN, where you were able to see, okay, which communities were not accessing the vaccines, and then as we realized it was the elderly that we wanted to emphasize, then really trying to get them the coverage there, which is the greatest risk up. No country did a perfect job because we didn't expect the pandemic, and so we were all scrambling to get going. Even the United States was quite a disappointment in terms of how prepared they were to scale up the diagnostics. And so there's a lot of great talk about, okay, we need better surveillance to catch these things earlier on.
Right, that was of course Bill Gates speaking to Navika. Now let's quickly move on. We have Lisa with us, who always takes us through all the stocks that are in news. Good morning, Lisa. Talk to us about all the stocks that we need to watch out for.
Yes, very well. Good morning to all. So some business updates has been provided by the companies, and starting with Mahindra and Mahindra Financials, they have provided a business update for the Feb month. The total disbursements has grown 53% on Y basis and stood at 4,185 crore. The loan book also was up 1.5% over Jan, and the company continues to hold adequate liquidity buffer, which covers around 3 months of the fund requirement. MOIL has provided the production update for Feb month, and they say that the production has increased by 10% on Y-on-Y basis and stood at around 1.31 lakh tons of manganese ore, while the sales has increased 19% on year-on-year basis and stood at 1.32 lakh tons of manganese ore. Management has commented that they are fully geared to increase the production level in the coming months. Natco Pharma board will be holding a meet on March 8th to consider buyback of its equity shares. Alembic Pharma stated that they will be taking impairment charge of around 1,150 crore for the 3 manufacturing plants in Gujarat which are under construction, and they mentioned that the new plants are likely to generate less cash than what was expected, and their profitability is hit by price erosion in the US coupled with the interest rates. Even the steel companies will be in focus, like JSW Steel, Tata Steel, JSPL will be in focus on the back of Indian Steel hiking the HRC and CRC prices by 1,000 to 2,000 per ton for March, and post this price hike, the HRC price stands at around 61,000 to 61,500 per ton, and the domestic prices are now at 5% discount to China. And lastly, on Aster DM Healthcare, Dubai Fajr Capital is said to be in talks to buy Aster DM's Gulf business, and even in the Q3 con call, the management had mentioned that they have plans to sell the GCC business and separate it from the Indian listed company. So these are all for today's stocks that will be in focus today.
Right, Lisa, thank you so much for that. And of course, that one stock that is in focus today is Alembic Pharma. Alembic Pharma will take impairment charge of 1,150 crores on 3 manufacturing plants that are under construction in Gujarat. My colleague Somit joins in with more details on this. Take it away, Somit.
In an announcement, the company said that they will be writing off assets or capital work in progress worth nearly 1,150 crore rupees. Now, this is related to recently commissioned or to be commissioned facilities. Now, the company is doing so because they believe that the recoverable value of these assets has significantly reduced due to adverse market condition. Now, as of September 2022, if you see the total capital work in progress in the company's books stood at close to 2,400 crore rupees, and nearly half of it has been written off by the company. Now, this is related to 3 facilities which are in oncology, injectables, oral solids, and ophthalmic and generic injectables. Now, though the company has recently started getting product approvals from US FDA for the injectable facility, the company believes that they might not be able to recover that much value from these assets as much as they have invested. In short, they are saying that the investments that they have done in these assets in the past will not be able to recover, and hence they are writing off these investments from their book. Now, do remember, this impairment won't lead to any cash outflow as it will be done from the general reserves of the company, but it is kind of negative because these investments have been done by the company and cash has been deployed by the company in the past. Now, originally company had planned a 2,000 crore rupees capex to set up 3 new facilities during FY18 to FY20, which got delayed due to COVID, and because of this the market conditions also deteriorated. Now, because of COVID also, if you see the capital expenditure of the company overshooted, and the total capex stood at close to 3,500 crore rupees. Now, majority of this capex was shown as CWIP because the commissioning of these plans was still pending, and earlier also in FY22 and in the 9 months of FY23, the company has impaired or written off R&D expenses worth nearly 200 to 150 crore rupees, and so far in 9 months FY23, if you see, the company's net profit were down by nearly 61% on a YOY basis because of these write-offs.
Thanks so much for that, Somit. Let's quickly also take it to Vamakshi. She's been going through all the brokerage notes that have come through, and she'll take us through the most relevant ones. Vamakshi.
Absolutely. Let's first start off with Shriram Finance. We have a note that has come in from Antique, and what they're highlighting is that the company is all set to consolidated merge entity synergies. Post-merger, Shriram in fact has emerged as the 3rd largest NBFC in terms of AUM. The combined entity will also see see lowering of cyclicality of their commercial vehicle segment. Promoter stake sale is the only overhang on the stock in their opinion, which is why they've gone ahead, maintained a buy rating on the stock, given a target price of 1,685 per share. The next one on our radar is SRF. We have a note that has come in from Jefferies. What they're highlighting is that the near-term outlook for refrigerant gas is looking quite strong, but the demand is expected to drop from 2024. Nevertheless, domestic refrigerant gas prices are up nearly 10 to 20% on a month-on-month basis. But apart from that, they also believe that in the calendar year 2024, demand is likely to be impacted by a 30% HFC phase down in the US. A likely accelerated 21% phase down is also expected in the EU region as well. So given all those factors, Jefferies has maintained a hold rating on SRF, given a target price of 2,450 per share. And lastly, we will be watching out for Ultratech Cement. We have a note that has come in from Goldman Sachs, and what they're highlighting is that the company's visibility in terms of growth has improved. Valuations are appearing to be quite attractive. In fact, the volume growth that the company is expecting to report is at around 10 to 12% versus an industry growth of nearly 6 to 8%. So therefore, Ultratech is looking quite well positioned to deliver industry-leading volume growth. So given all these factors, they've maintained a buy rating on Ultratech Cement, given a target price of 8,500 per share.
Right, thank you so much for all of those details coming through, Vamakshi. But we'll quickly take it forward. HDFC Life had, a management meet with analysts, and BNK Securities met up with them. And of course, this is one of the first meetings after the budget proposal. The budget proposal has really dented, the outlook that investors have on HDFC Life, if I could put it that way. And what the management seems to be suggesting is that HDFC Life has all the building blocks in place to offset any impact of that budget proposal. Mind you, the stock is down nearly 20% from the high just before the budget. Now, what HDFC Life is also doing is they're looking at product innovation at higher and higher ticket prices. What they're also doing is they're designing products which include a higher quantum of death benefit. Mind you, death benefit is not taxable, so they're looking at some ways to reroute or some ways to circumvent those budget proposals. The management also believes that the above product, which is the death benefit product, could be suitable for HNIs who are looking to pass on benefits to to the next generation. They are also in discussions with HDFC Bank to increase counter share to 70% from 60% in the next 1 to 1.5 years. HDFC Bank's 5 to 6% insurance penetration in the customer base provides a significantly large opportunity. They continue to reiterate that, and they believe that margin neutrality by FY23 will be achieved, and they see a headroom for an increase in margins in FY24 as well, despite the budget proposal. So what they are saying is the company is prioritizing on margins, but even more prioritizing on growth. So of course, we have to wait and watch as to how FY24 plays out for HDFC Life.
Well, on that note, we're completely out of time on this show, but you don't go anywhere. There's the market coming up. Thank you so much for tuning in.
क्या हुआ